This week, the stock market is in the spotlight, especially as technology companies lead a surge. Think of the market as a daily story, with tech stocks currently playing the heroes. Their rising prices signal optimism and strength in parts of the economy. But what does this mean for you? It shows that investors believe in the future of these companies. This week is packed with new information: company earnings, spending data, and global events, all shaping the market's direction. Each headline is a clue to the bigger economic picture. We'll break down why tech stocks are rising, what earnings reports reveal, and why retail sales matter. Understanding these trends isn't just for Wall Street, it's for anyone who wants to build a secure financial future. Technology stocks are rebounding, and the Nasdaq is nearing record highs. After a period of uncertainty, optimism is returning to the market, and investors are taking notice of the rapid changes unfolding in the tech sector. The main driver? Excitement around artificial intelligence, or AI. This technology is at the heart of a new wave of innovation, capturing the imagination of both Wall Street and Silicon Valley. Tools like ChatGPT are transforming industries, from customer service to creative work, and companies are racing to build the massive data centers that power these AI breakthroughs. The demand for computing power is skyrocketing. This boom benefits suppliers of chips, equipment, and software, fueling stock gains across the entire tech ecosystem. Every part of the supply chain is feeling the impact, from hardware manufacturers to software developers. For example, OpenAI's renewed growth led investors to bet on Oracle, which has a massive contract with them. These partnerships are becoming more common as companies look to capitalize on the AI revolution. When AI companies thrive, their partners do too, creating a ripple effect across the market. The success of one company can lift dozens of others, spreading optimism and investment throughout the sector. This isn't just hype. Real business deals and innovation are pushing tech stocks higher. Companies are signing new contracts, launching new products, and hiring talent to keep up with demand. Investors see AI as a fundamental shift, not a passing trend. They believe this technology will change how we live and work, and they're positioning themselves for long-term growth. Understanding these connections helps you see the real forces behind market moves. It's not just about individual companies, but about the entire network of innovation and investment. The tech rebound is built on progress in AI and the belief that it will reshape the economy. Every breakthrough, every new application, adds momentum to the surge. Investors are betting on lasting change. They're not just chasing short-term gains, they're investing in a future shaped by artificial intelligence. That's the story behind the surge. A combination of innovation, optimism, and the belief that AI will drive the next era of economic growth. The AI boom is the main engine driving tech right now. AI is no longer science fiction. It's creating huge business opportunities and demand for computing power. Data centers, the brains of AI, are a booming industry. Think of it as a gold rush, where the real winners are those selling the shovels: chips, networking gear, and software. These companies are seeing their stocks soar as everyone needs their products. AI's impact goes beyond tech, transforming healthcare, finance, and retail. The continued growth of tools like ChatGPT confirms strong, lasting demand. This cycle of investment and innovation is fueling a powerful, long-term trend. The AI revolution is just getting started. This week marks the start of earnings season, an important time when public companies open their books and reveal their financial results to the world. It's a moment of truth for businesses, investors, and anyone interested in the economy. Think of it as a business report card, a detailed snapshot that shows how much money was made or lost over the last quarter. These numbers tell a story about how each company is performing and what challenges or successes they've faced. This week, major names like Coca-Cola, Marriott, CVS Health, and Spotify are all reporting their results, giving us a real-time snapshot of the broader economy and how different industries are faring. These reports have a direct impact on stock prices. Strong results can send shares soaring, while disappointing numbers often lead to sharp declines. Investors and traders watch closely, reacting to every detail. For example, on Semi's recent revenue miss, driven by slower electric car sales, led to a noticeable drop in its stock price. It's a reminder of how quickly fortunes can change based on a single earnings report. Earnings reports help investors cut through the noise and focus on what really matters: business fundamentals. Are companies growing? Are they profitable? Are they managing costs and seizing new opportunities? Do they have a solid plan for the future? Are they adapting to changes in the market and staying competitive? These are the questions that earnings season helps answer, providing valuable insights for anyone following the markets. Smart investors use this information to make informed decisions, adjusting their portfolios based on what they learn from these reports. It's about thinking like an owner, not just a spectator, taking an active role in understanding the companies you invest in. In the end, understanding earnings is one of the most important steps to investing wisely and building long-term wealth. Let's zoom out to the bigger picture. The U.S. Retail Sales Report. This monthly snapshot is more than just numbers on a page. It's a window into the everyday choices and habits of millions of Americans. The report tracks how much Americans spent last month at stores, restaurants, and online. Whether it's a quick coffee run, a family dinner out, or a big online purchase, every transaction adds up. It's a powerful indicator of economic health, showing how confident people feel about their finances and the future. When consumers are optimistic, they're more likely to spend. Economists expect core retail sales to grow, though maybe a bit slower than before. This slowdown isn't necessarily bad. It can mean the economy is finding a sustainable pace after rapid growth. Even modest growth is a good sign, showing a solid foundation for spending. It means people are still opening their wallets, supporting businesses large and small. Consumer spending drives over 2/3 of the U.S. economy. When people buy goods and services, it sets off a chain reaction that keeps the economic engine humming. When people spend, businesses thrive, jobs are created, and the cycle continues. More sales mean more hiring, more paychecks, and more opportunities for everyone. Strong retail sales can boost the stock market and encourage business investment. Investors and companies watch these numbers closely to plan their next moves. Last year's robust spending fueled economic growth, helping the country recover from tough times and build momentum. This week's report will show if that strength is holding up, or if consumers are starting to pull back. It's a vital clue for the months ahead, helping experts predict where the economy is headed and what challenges or opportunities might arise. Retail sales tell us if the economic engine is still running strong, or if it's time to prepare for a slowdown. In many ways, these numbers are the heartbeat of the American economy. The American consumer is the heartbeat of the economy. When people feel secure, they spend on essentials and experiences alike. This confidence fuels growth, keeping businesses open and people employed. Last year, strong consumer spending drove impressive economic growth. Optimism about the future leads to more spending, which boosts company profits and stock prices. There's a direct link from busy stores to a rising market. Consumer and investor confidence go hand in hand. As we await new retail sales data, we're looking for signs that this strength continues. Even if spending slows, steady growth is key. A healthy consumer base protects against downturns and powers prosperity. The economy is built on millions of daily decisions. Your choices matter more than you think. Global events matter too. This week, Japan's stock market hit a record high. The surge follows the election of new Prime Minister Sanae Takaichi, whose pro-business agenda excites investors. The Takaichi trade is driving optimism, as reforms and tech investment are expected to boost growth. For years, Japan's economy lagged, but this political shift brings new hope. International investors now see Japan as a land of opportunity. The Nikkei's rise reflects confidence in the new government's plans. Japan is a major global player, and its growth benefits the world economy. Including the US political change can quickly shift market sentiment. Just as AI fuels optimism in the US, new leadership is energizing Japan. It's a reminder of how connected our economies are. Japan's story is a key part of this week's global market narrative. Let's turn to gold, a classic safe haven asset. While stocks climb, gold prices have dipped, reflecting shifting investor sentiment. Gold is a security blanket when uncertainty rises, but lately, its price has swung up and down. Some of the recent drop is due to profit-taking after earlier gains. But deeper uncertainty remains, especially about what the Federal Reserve will do with interest rates. Global events, like Middle East tensions and nuclear talks, also influence gold's appeal. Mixed signals, fear and hope, are making gold prices volatile. While tech stocks tell a story of optimism, gold signals caution. Not all investors are convinced the path forward is smooth. The dip in gold suggests fear has eased and risk appetite is up. Watching gold helps gauge the market's underlying mood. We've covered tech's rebound, the power of consumer spending, and global shifts from Japan to gold. Each piece is part of the global economic story, and understanding them empowers you. You don't need to track every market move, but knowing the big trends helps you make smarter decisions. Innovation, spending, and global events all shape your financial world. The goal isn't day trading, but being an informed, long-term investor. This week's market optimism is a reminder of the economy's resilience. Use this knowledge to ask better questions and take control of your financial future. Investing in your understanding is always the best investment you can make.